This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Friday, August 14, 2026, and this is the New York pre-market. Now, let's get into it. Bitcoin is sitting on a knife edge at $62,586, down 1.20%, with the broader crypto market trapped in a state of absolute paralysis. We are looking at a fear and greed index of 14 out of 100, deep into extreme fear, while the traditional VIX languishes at a comfortable 1455. Today, we dissect whether this is a liquidity trap caused by geopolitical spillovers or a structural shift in institutional positioning. It is definitely a liquidity trap. The divergence is staggering. You have the SIBO volatility index sitting at 1455, which screams complacency in the equity markets, while crypto sentiment is frozen at 14. That isn't correlation, that is isolation. The market is reacting to internal cracks rather than external macro shocks.
And those internal cracks are widening fast. Bitcoin futures demand has collapsed to 2024 lows. That is the smoking gun. We aren't seeing spot accumulation here. We are seeing leveraged players egress. The price stability at 62,586 is artificial because the derivative side of the book has gone quiet.
Exactly. And silence in the futures market is dangerous. Without that leveraged cushion, any sell pressure hits the spot book directly. We are watching a classic unwind where the lack of buyer interest allows the price to drift lower without a violent pop, making the support at 62,586 look stronger than it actually is.
Let's look at the data. As of 9:19 Eastern Time on Friday, August 14, 2026, Bitcoin trades at $62,586, down 1.20%, with a 24-hour high of 63,918 and a low of 62,648. Ethereum is holding at $1,868, down 0.30%. Solana rests at $75.32, also down 0.3%. Meanwhile, governance tokens are under siege, with Uniswap crashing 8.2% to $3.23. Turning to the economic calendar, today brings retail sales month-over-month data and business inventories releases. These figures will provide the first clear gauge of consumer spending strength heading into the weekend. Additionally, with the U.S. Senate housing bill including a CBDC ban currently in play, we expect heightened scrutiny on regulatory narratives surrounding assets like XRP and general crypto infrastructure over the next 48 hours. Apex, how does this macro backdrop intersect with the current crypto sentiment?
It underscores the isolation. The macro data is waiting for a signal, but crypto is screaming on its own frequency. The VIX at 1455 tells us equities are not pricing in a recession right now, but the fear and greed index at 14 tells us crypto investors are bracing for one. The disconnect suggests the crypto drawdown is self-inflicted, driven by the very futures collapse CIPHER mentioned, rather than a response to Tuesday's economic prints.
Let's dive into the headlines moving the needle. First, Cointelegraph reports that Iranian crypto outflows have spiked 700% following U.S.-Israeli airstrikes. Second, CoinDesk notes that PayPay, a 40% owner of Binance Japan, is seeking up to $1,100 million in a Nasdaq IPO. Third, Cointelegraph highlights that U.S. authorities are seeking to recover $327,000 in USD from a romance fraud scheme. Grid, CIPHER, SPECTER. How do these stories reshape the landscape for our key assets?
The PayPay IPO is the most structurally significant item here. An $1,100 million raise from an entity tied to Binance Japan introduces a massive new liquidity vector, but we need to watch where that capital goes. Is it flowing back into the exchange ecosystem to buy spot Bitcoin, or is it being used to service debt and reduce exposure? Given the current futures demand at 2024 lows, my concern is that this new capital might simply stabilize the exchange balance sheets rather than fueling market-wide buying pressure.
I'm looking closer at the Iranian outflow spike. 700% is not a retail fluctuation. That is large-scale capital flight. When money leaves a jurisdiction rapidly due to geopolitical risk, it doesn't disappear. It gets dumped. If that flow involves stablecoins or quick exits into Bitcoin/Ethereum, it adds immediate sell-side pressure on thin books. Combined with the low volume we're seeing globally, that kind of sudden outflow can trigger stop losses far quicker than normal market conditions allow.
That explains the lack of bounce. Usually when you see geopolitical spikes like that, you get a dip buying opportunity, but look at the charts. Bitcoin is at 62,586 and there is no volume backing the consolidation. The 24-hour range is tight, but the closing prints are weak. The support at 62,586 is being tested. But without the volume surge grid usually looks for to confirm a base, this feels like a slow bleed rather than a shakeout. The UNI crash to $3.23 is the real technical warning sign. Governance tokens are getting crushed, which often precedes broader alpha decay.
Uniswap is down 8.2% to $3.23, with a 24-hour high of $3.52 and a low of $3.19. Chainlink is the standout performer, up 1.7% to $8.80. Let's start our deep dive with Bitcoin. Grid, what is the technical reality at this support level?
Bitcoin is trading at $62,586, and we are staring at the edge of the map. The critical support is exactly at this level. A break below opens a direct line to the $60,000 psychological floor. The 24-hour high was $63,918, so we've retraced significantly from earlier intraday highs. The low of $62,648 shows we are hovering right at the boundary. Technically, this is a consolidation zone, but the lack of upward momentum candles suggests the bears are in control of the immediate time frame.
But let's look beneath the candlesticks. The reason this support is fragile is the derivatives data. Bitcoin futures demand is at 2024 lows. There is no open interest to prop this price up. If spot sellers step in, there is no leveraged bid waiting to catch the fall. The spot price at 62,586 is being maintained by a lack of aggressive selling, not by aggressive buying. Once the liquidity thins further, that support becomes theoretical.
And the sentiment is confirming that fragility. The fear and greed index is at 14. That is extreme fear. When fear hits that depth, retail traders don't buy the dip. They freeze. They wait. So you have low volume from Grid, no leverage from CIPHER, and no retail entry from Pulse. That combination is a recipe for a slow grind lower until someone forces a change in narrative. So the consensus is that Bitcoin support is hollow. Moving to Ethereum. It's at $1,868, down 0.30%. How does Ethereum compare to the Bitcoin technical picture?
Ethereum at $1,868 is showing relative strength, primarily because it hasn't been sold off as aggressively as the alts. However, the ratio is telling. Ethereum dominance is 10.07%, while Bitcoin is 56.07%. Ethereum is holding its ground, but it's holding it defensively. The chart structure is tighter, but it's still in a downtrend channel. It's not breaking out. It's refusing to break down as hard as the rest of the market.
The flow data supports that defensive posture. Capital is rotating out of speculative L1 and into settlement layers. We saw Solana holding at $75.32, down only 0.3%, alongside Ethereum. The market is fleeing the beta, the high-growth, high-volatility tokens, and hiding in the coins that serve as infrastructure. This isn't bullish for Ethereum per se, it's just less bearish than the alternative. The liquidity is concentrating here because it has to somewhere.
Don't mistake concentration for safety. Just because capital is pooling in Ethereum doesn't mean it won't leave if the macro environment shifts. The VIX is low, yes, but crypto-specific volatility is spiking. If Ethereum loses its footing at 1,868, the liquidity in that pool will dry up instantly. The risk is that this relative strength is actually a trap, attracting late buyers before a broader sector correction drags it down with the rest.
Chainlink is bucking the trend, up 1.7% to $8.80, with a 24-hour high of $8.89 and a low of $8.68. Why is Chainlink standing strong while others fall?
Link at $8.80 is demonstrating clear separation from the broader market weakness. The chart shows a higher low structure on the shorter timeframes, indicating that buyers are stepping in at $8.68 consistently. While Uniswap is collapsing, Chainlink is absorbing the sell pressure. This is a flight to utility trade. Traders are using Chainlink as a proxy for real-world adoption narrative rather than pure speculation.
The headline about TD Securities viewing NYSE tokenization as an institutional turning point is likely fueling this flow. Link is embedded in that infrastructure narrative. Money isn't just chasing price action, it's positioning for the tokenization wave. The flow into Chainlink suggests smart money is front-running the integration of traditional finance rails onto blockchain networks. It's a structural bid, not a speculative one.
That aligns with the sentiment data. While the overall fear index is 14, there is a distinct sub-narrative around infrastructure and tokenization that is immune to the current panic. Retail is scared of the coin flips, but the community sentiment around Oracle networks and bridges is stabilizing. People are willing to hold Chainlink through the fear because they believe in the underlying thesis, whereas they are dumping governance tokens they feel offer no utility. Uniswap is the clear laggard, down 8.2% to $3.23. Grid, what is happening technically with Uniswap?
Uniswap is in free fall. At $3.23, we are well below recent consolidation ranges. The 24-hour high was $3.52, meaning it has given back nearly all intraday gains and then some. The chart is ugly, lower lows, lower highs, and expanding red candles. This is a breakdown of a key support structure. Unless we see a decisive close above $3.35, the technical damage is severe.
The on-chain data confirms capitulation. Large wallet transfers associated with Uniswap treasury movements are hitting exchanges, signaling intent to sell. Unlike Bitcoin, where we see holding patterns, Uniswap is seeing active distribution. The liquidity is evaporating from this pool. Investors are realizing that governance rights in a bear market carry no premium, and they are exiting en masse.
And this is the contagion risk. If Uniswap continues to bleed at this rate, it pulls the entire decentralized finance sector down with it. Other governance tokens will face scrutiny. The question isn't just Uniswap's price, it's whether other protocols will suffer a similar loss of confidence. The market is punishing perceived lack of value accrual. Until Uniswap finds a bottom, the decentralized finance sector remains toxic to capital allocators.
Solana is holding at $75.32, down 0.30%, with a 24-hour high of $76.47 and a low of $75.10. Despite the market chill, Solana is resisting. What is supporting this price?
Solana is holding at $75.32, maintaining a tight range despite the broader weakness. The 24-hour low of $75.10 is acting as a dynamic support. Every time price dips toward that level, buyers are stepping in. It's a textbook defense. Compared to Cardano's 2% drop or Avalanche's 1.8% slide, Solana is showing remarkable technical resilience. The structure is intact, and it hasn't broken its immediate trend line.
The network activity supports the price. Transaction counts and active addresses remain robust compared to competitors. While other chains see flow exodus, Solana is retaining user engagement. This retention provides a baseline of buy pressure from native users who are not sensitive to short-term price fluctuations. The capital is staying in the ecosystem, which prevents the kind of liquidity vacuum we see in Uniswap or older L1.
The sentiment around Solana is pragmatic rather than euphoric. Users aren't celebrating, but they aren't fleeing either. It's a stickiness factor. The community is loyal enough to weather the storm. However, be careful. The loyalty might be based on network performance, not price appreciation. If Solana breaks $75.32, that loyalty could turn quickly into frustration if the broader market drags it down. XRP is trading at $1, down 0.30%, with a 24-hour high of $1.13 and a low of $0.9983. The Senate housing bill includes a CBDC ban. How does this headline impact XRP?
At $1, XRP is essentially flat. The 24-hour range is extremely narrow, indicating a standstill. There's no explosive reaction to the CBDC ban news. The price action suggests the market had already priced in regulatory clarity or is ignoring it in favor of the broader macro fear. Technically, XRP is coiling, but it is lacking direction. It is neither leading the rally nor leading the dump.
I'd argue that silence is a form of nodding. The fact that XRP didn't spike on the CBDC ban news suggests that the market views it as a non-event or a delayed positive. However, the risk is that without a catalyst, XRP will get dragged down by correlation. If Bitcoin breaks 62,586, XRP will follow, regardless of the legislative background. The technicals are weak, the news is good, but the price is not believing it yet.
There is little flow activity around XRP right now. It's largely dormant. The CBDC ban narrative is a structural hedge, but it doesn't generate immediate trading volume. Money isn't rushing in, it's waiting. The lack of volume at $1 confirms that big players are on the sidelines, observing the chaos elsewhere before committing capital to an asset that offers protection but no upside momentum in the current environment.
Let's look at the remaining major movers. Litecoin is at $44.34, down 0.70%. Cardano is at $0.17, down 2%. Avalanche is at $6.37, down 1.8%. And Polkadot is at $0.759, down 1.20%. Are there any final observations on these assets?
LTC at $44.34 is echoing Bitcoin's weakness. It's down almost 1%, tracking the leader. Cardano at $0.17 is taking a harder hit at -2%, showing that legacy smart contract platforms are losing ground to higher throughput chains. Avalanche at $6.37 is struggling, down 1.8%, as the gaming and enterprise narratives cool. Polkadot at $0.759 is barely moving, down 1.20%, suggesting it's in a low volatility compression zone.
The flow data confirms a rotation out of the old guard. Cardano, Avalanche, and Polkadot are seeing reduced interest compared to Ethereum and Solana. The market is consolidating around the two largest ecosystems. If you want exposure to smart contracts right now, the liquidity is in Ethereum and Solana. The others are suffering from neglect, which is often worse than active selling.
And neglect leads to vulnerability. When attention shifts, liquidity dries up and slippage increases. If a negative shock hits, these neglected assets will fall faster because there are fewer buyers to catch the falling knives. Keep a wide berth on Cardano and Avalanche until we see volume return to their order books.
Apex tie this all together. We have Bitcoin testing support with hollow fundamentals, Ethereum holding relatively but defensively, Chainlink showing strength via infrastructure narratives, and Uniswap capitulating. How do we read the board right now?
The board reads as a sector purge. We are witnessing a forced rotation. The VIX at 1455 tells us the world isn't ending, but the fear and greed index at 14 tells us crypto is eating itself. Grid's observation of Bitcoin's fragile support at 62,586 is reinforced by CIPHER's data on empty futures markets. There is no one left to defend the line. Pulse correctly identifies that sentiment is maxed out on fear, meaning any positive surprise could spark a relief bounce. But currently, the path of least resistance is sideways to down. SPECTER's warning about Uniswap contagion is critical. Until decentralized finance governance tokens stabilize, the entire sector remains toxic. The takeaway is patience. The structure is bearish, the liquidity is thin, and the only bright spots are utility-focused infrastructure plays like Chainlink and resilient chains like Solana. Everything else is being shaken out.
To summarize today's ShadowQuant Crypto Edition, Bitcoin is testing the $62,586 support level amid collapsing futures demand and extreme fear sentiment. Ethereum is holding steady at $1,868, outperforming the broader alt market but lacking bullish momentum. Chainlink stands alone in green, driven by tokenization narratives, while Uniswap crashes 8.2%, signaling deep, decentralized finance distress. The VIX remains calm at 1455, confirming this is an isolated crypto liquidity crisis. We'll check back tomorrow for updates on the retail. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.